Big drop in interest rates is also continuing today. Look at the 10-year yield, which is hovering near its lowest levels ever. Diana Olick is looking at the impact that's having on mortgage rates here and the housing market. Diana?
Kelly, as the yield on the 10-year Treasury tanks, so do mortgage rates, which loosely follow that yield. The average rate on the 30-year fixed hit 3.42% on Friday and just hit 3.34% today, that according to Mortgage News Daily. And that's matching an 8-year low. It was at over 4.5% just 1 year ago, and the expectation was that rates would move slowly higher this year. So let me do a little simple math for a borrower with good credit and a 20% down payment on a 30-year fixed. For a $300,000 loan a year ago at 4.6%, the monthly payment was $1,520. Today, it's $1,320, a savings of $200 a month. No surprise, the refinance market is suddenly booming. Applications to refi up around 165% compared with a year ago. But mortgage applications to purchase a home and home sales so far are not reacting as well. That is more due to the severe shortage of homes for sale. Back to you guys.
Okay, Diana, I'm going to put you on the spot here, and I apologize. Here we go. You ready? Because I remember when there was a refi boom about 10 years ago, people were taking out cash and buying things like solid gold boats. I'm just curious, do we know if people are simply refining because they want to lower their monthly payment? That's good.
That was a cash out refi boom.
Or they taking the cash out?
We are no. We are not seeing the same amount of cash out refis, home equity lines of credit, nothing like what we saw a decade ago. This is mostly refinances just to lower that rate on the 30-year fixed into a much lower payment. People are just much more cautious than they were years ago. I still question why, and we have record amounts of home equity. I'm not saying people should be pulling it out, but we have so much money in our homes right now. People are still keeping it in there, but refining to that lower rate.
One thing I'll ask both of you, I want to ask Paul Hickey about this, is will the drop in rates make the housing shortage and the situation worse? So it can't really help affordability if people don't have a down payment to get into these properties, but it will probably push up prices even further.
Yes, I mean, it depends on the whole supply-demand equation, but I mean, the lower rate, it's certainly helping making housing more affordable. Coupled, you have.
Well, but let's.
Is it?
Well, just Diana was talking about.
No, but Diana, I don't know if you remember this, right? I've got the ears and the memory of an elephant, okay? Which is when I first joined CNBC, we did a segment when rates went down. And it was, will the refi boom kill the housing market 5 and 10 years out because nobody's going to move? They're going to be locked into these homes with these low rates, and they're never going to leave. You know what they're going to do? They have another kid. They're going to build a room, but they're not going to move, and no one's moving.
And that's why we're seeing the remodeling market booming. We are seeing mobility at record lows right now. People are simply not moving. They don't want to give up that record low mortgage rate. And also remember, home price gains have reaccelerated because of that shortage of homes for sale. Prices are really starting to heat up. So why would anybody who's got a great rate right now in their home want to have to step up to a much higher cost? Maybe because rates are lower now, but again, it's a much higher cost for that payment on that move-up home. So we are seeing a lot of people stay in their homes, and that is hurting that shortage of homes for sale.
And Diana, just kind of from where you sit, how do you see this playing out? Yes, the lower price should make the monthly payments better on a mortgage, but if you don't have the 20% down, there's no getting around it, is there? I mean, is there a way through the non-banks, through non-traditional channels for the millennials, for others who feel like they're shut out of home ownership to take advantage of these low rates, or is that hurdle, that 20% down payment hurdle, just going to remain?
Well, look, you have FHA, which is 3.5 down on a monthly for the mortgage. So there are a lot of ways to get into the mortgage market right now. It's a question of, do you have the credit? Do you have the ability to repay, which is a big part of the market today, and that they're looking for having debt to income ratios. I don't want to get too technical, but if you don't show that amount that you have per month coming in to go out, they're very strict on that. In fact, we had the CEO of Amherst Holdings say that the mortgage market is still very tight, and people who are freelancing or who have multiple jobs are having trouble qualifying for a mortgage because they can't show that income coming in the way that somebody who has just one job does. So it's hard to get a mortgage right now, but with rates coming down, it should get a little bit easier. The question is, do the rates pop back up when the market recovers? And that is likely going to happen.